let's talk about the market technicals and find out where we are headed and how you should approach this volatility that we're seeing. Dharmesh Shah of ICICI Securities now joins in for a technical check on the markets. Dharmesh, afternoon. What have you made of this recovery that we've seen in the last 2 hours? What does it tell you and how do you position for trade now?
Yeah, good afternoon, Reema. Definitely, I think so. The recovery has been very sharp from the major support area of 16,900, which was again a 200-day moving average, which was around 880. And we believe, I think so, this market has already seen a correction of 5% from the top of 18,000 levels, and we are obviously the 5% cut. They see the market seems to be highly oversold in nature. We expect a technical pullback to head towards 17,400 to 500. This is again the major resistance for the Nifty. So overall outlook remains to be positive. We believe the major rally which happened from 15,300 to 18,000, this correction is nothing but the retracement of this major rally, and where we see a market should not see a breakdown below 16,700 to 800. So any dip from the current level should be looked as a buying opportunity for the short-term target of around 17,500. But overall, I think so. Structurally, we are still positive, and what we see is nothing a correction of a large part of a rally. So buy on dip should be the strategy. Keeping a stop loss of 16,700 remains to be the strong support for the Nifty.
Okay, for the second day in a row, at least, the 200-day moving average, which is 16,990, 992, has held for the markets yesterday and today. We dipped below the 200-day moving average, but we managed to find support and climb above those levels. Dharmesh, any stock recommendations? Because you are expecting this pullback to last to and take us to 17,500.
Yes, we expect, I think so, the market leader, Reliance Industries, should see a recovery from the current levels. The stock has seen a good correction, and a major support of 2360 has been held even in today's current trading session. If you look at the today's low, it is around 2360. We expect, I think so, the stock to see a 10% upside. So almost 2560 to 2600 is likely target for Reliance from the current levels. So any dip in Reliance towards 2390 to 2400 should be looked as a buying opportunity for an upside target of around 2580 to 2600. Apart from Reliance, we expect again the banking space, which has seen a good outperformance in last few trading sessions. And what we see is a correction after a sharp rally. We expect even for the bank Nifty, I think so, the one where stocks like State Bank of India, or in the privates again, Axis Bank, HDFC Limited, HDFC Bank and Bajaj Finance should do good from the current level. So overall banking consumption also will remain to be positive for Asian Paint, Titan, other stocks which have been relatively outperforming even in this current fall. So we believe this stock should see the relative outperformance going forward. So consumption, IT again, a oversold territory, so technical pullback cannot be ruled out for IT also. So in and all, except metals, I think so, the one which seems to be quite vulnerable even at the current levels, most of the sectors should see a contribution from the current levels.
Dharmesh, thank you very much for joining in. Let's now get to our mid-cap movers.